Well, thanks for that. So let's divide this into three segments. First, what is the deal? So they are acquiring 50% stake in Sterling Biotech from Perfect Day. Now this acquisition will lead to Sterling Biotech becoming a 50-50 joint venture between Zydus Lifesciences and Perfect Day with equal representation on the board. The newly formed JV aims to establish a manufacturing facility dedicated to producing fermented animal-free products for global markets. And the cost of acquisition that Zydus is doing is around 550 crores. Now, given the new objective of the entity to produce animal-free protein products, the company states that a strategic view of the existing business will be undertaken. This means that they may divest a part of the existing business. Now, note that Sterling Biotech's current business includes gelatins and APIs, and their FY24 revenue stands at around 450 crore, and from FY21 to FY24 they have grown at a CAGR of around 10%. Nomura has rated neutral rating for this with target price of around 1000, stating the same reasons as I said. Now, the other trigger that is leading to this pressure in the stock prices, their new competition impact. So Teva has launched a generic version of a product which is used to treat a certain bowel disease, and Zydus over the last years have enjoyed the benefit, a practical exclusive in absence of any competition, and the product seems to have contributed around 140 to 160 million US dollars of sales in FY24. With the launch of this Teva's generic, Citi believes that the sales of the product may fall 40 to 50% from the current level, and as the competition in the product has been delayed by more than 4 years, the street seems to be unaware of the concentration risk, and their impact may be seen in the valuation. So these are the two reasons we are seeing pressure on the stock.
All right, thanks for that, Varsha. Well, that was the roundup on why Zydus Lifesciences is in pressure today. But with that, we'll take it across to our guest for today, Vineet Bolinchkar, Head of Research from Ventura Securities, and Rajesh Palvia, Senior Vice President, Technical and Derivatives Research from Axis Securities, join in. Hello and welcome to Ask Profit. Vineet, let me take it to you. The street is not excited about the new acquisition that Zydus Lifesciences has made. What are your views on it? How is it looking fundamentally?
I think, we would like to delve more deeper into the strategy of the company before commenting on the JV, the acquisition.
Vineet, fair point, but just with regard to where we are currently and all the limited information we have, and just where valuations are at, where Zydus Life is concerned, is there a view that you may have?
No, I think the Zydus valuations is fairly priced. And we would like to see more commentary come in, as I said, before making any kind of statement on this acquisition.
All right, Rajesh, I'll come to you on this one. How is Zydus Lifesciences looking to you on charts?
So after today's gap down, stock now slipped below to its 20-day, 50-day moving average, and stock has broken down its upsloping trend line on the downside. So looking at the near-term, short-term structure, we believe that some more weakness we could see in the stock prices. Possible downside we may see towards 1070 to 1050. That's the lower side, the level where we can see Zydus Lifesciences to slip further. So until the stock not crosses above 1180 kind of zone, I think we may see further more supply to there in the stock prices. So I think one should wait for this supply pressure to settle down. Maybe around 1050, 1060, again, we can review this stock.